So Goldman Sachs just dropped a big buy rating on the tech company Kuaishou. And you have to wonder, what are they seeing that maybe others aren't? Well, that's what we're here for. We're going to break down their entire analysis to figure out exactly what's behind this big call. Let's dive in. And really, this one phrase from their report, it pretty much sums up the whole thing. Goldman's take is that Kuaishou is walking this incredible tightrope, perfectly juggling three huge things at once: amazing growth, really healthy profits, and this massive, kind of risky bet on the future of AI. And let's just get straight to the point, no burying the lead here. Their conclusion is super clear. They are sticking with their buy rating. They see a company that isn't just getting by, it's actually thriving because it has mastered this really tricky balancing act. Okay, so let's break down the first piece of their argument, the foundation, right? Because before you can go making big bets on the future, your present-day business has to be absolutely rock solid. And for Kuaishou, it looks like it is. Let's start with the top line, total sales. Kuaishou's revenue shot up 13% year over year. Now, that number on its own might not sound like it's setting the world on fire, but in the tech market we have today, which is so competitive, posting double-digit growth like this, that's a really powerful signal that things are going well. But here's where the story gets even better. Profits? Well, they grew even faster, at a massive 20%. And that tells you something really important. This growth isn't just fluff. The company is getting more efficient and making more money from its sales. In fact, they beat Goldman's own profit forecast by 10%. That's a huge beat. And this chart really puts it all into perspective. If you look just at their core engine, that's advertising and e-commerce, that part of the business grew by 14%. Now look at that compared to the industry average. See? This is the key takeaway. Kuaishou isn't just riding a wave. They're actively taking market share away from their rivals. So the core business looks great. The present is strong. But you know how it is in tech? If you're not making your next big move, you're falling behind. And with that solid foundation, Kuaishou feels free to place a huge bet on its future. And that bet, it has a name. This is the million-dollar question, isn't it? It's on every investor's mind. A strong core business is fantastic. But what's next? What's going to drive that next wave of growth? So what's Kuaishou's answer? Well, the answer is Kling. This is their new AI video generation tool. And make no mistake, this is their moonshot. The company is going all in, pouring money into what's called capital expenditures. You know, the really expensive stuff like powerful servers and specialized chips, and they're hiring a ton of people for the project. And the early signs are looking pretty good. Kuaishou themselves just raised their own revenue goal for Kling. But check this out. Goldman Sachs thinks even that is playing it safe. Their forecast is almost $30 million higher. And they even mention upside risk, which is basically analyst speak for, we think it's way more likely they'll crush this number than miss it. Okay, so we have a core business that's booming, and we have a high-potential AI project that's getting a lot of buzz. So how does an analyst take all of that and turn it into a concrete price on a stock? Let's get to the numbers. First, just a super quick definition here. A price target is just what an analyst thinks a stock will be worth over a set period of time, usually the next 12 months. It's their bottom line, their final valuation. So let's start with a baseline. Before this new report came out, Goldman's 12-month price target for Kuaishou was 68 Hong Kong dollars. That was already a pretty positive view of the company. So just remember that number, 68. Now, after factoring in that stronger growth in the main business and what they see as massive potential in Kling, they've raised it. Big time. The new price target is 77 Hong Kong dollars. This isn't just a tiny adjustment, it's a jump of over 13%. That signals a whole new level of conviction from Goldman about where this stock is headed. Of course, it can't all be sunshine and rainbows. No investment is a sure thing, and a good analysis always looks at the other side of the coin. Goldman is very clear about the potential problems that could pop up. And they lay out 5 main worries. You can see how they're all connected. If the ad market slows down or user growth stalls, that hits the core business. If Kling doesn't make money like they hope, or the AI tech just isn't that good, then the big future bet goes sour. And if any of those things happen, profitability could take a nosedive. And that whole fine balance we talked about, well, it could all come crashing down. So it all comes down to this single image, right? Kuaishou is performing this incredible high-wire act. On one side, you have a very profitable present. On the other, a very high-risk but potentially high-reward AI future. And the real question that Goldman's report leaves us with is this: is that balance a work of sheer genius, or is it just dangerously fragile?